I think we can start off by introducing all our panelists. So we have John Wu, president at Ava Labs. We have Cecilia Haye, CFO at FlightTrip.com Group. On Zoom, we have Mark Mobius, founding partner at Mobius Investments, as well as Vera who is the director and founder of Liquidity and Sustainability Facility and non-resident senior fellow at the Brookings Institute. So thank you everyone for being here. We'll start off. Digital assets is a very broad term, which has a lot of different elements within it. So I would love to start with John. Could you maybe give us a little explanation on what are digital assets, what's the landscape, and what are some different types within digital assets?
Absolutely. And first of all, it's nice to see you again. I was just at Cornell guest lecturing in an econ class that Raf and a few of these students were here. And I talked to like 6 different professors, and they were all worried about their research. So this settlement, I haven't read anything about it yet, but I think it's wonderful, and they'll ease a lot of the professors who need funding to do what they need to do. So very proud to be a Cornellian. You know, Mark, I have to say I'm a big fan of yours as well. My first job after Cornell was as a technology and hedge fund investor at a place called Tiger Management. And I've been following Mark's great work on emerging markets for a long time. He's a legend, and it's an honor to be on this panel with him. So Ava Labs, Avalanche, actually was founded right here out of not Cornell Tech, but up in Ithaca, Cornell Computer Science Department. So the Avalanche is a layer 1 smart contract protocol in the blockchain space. It is compatible with Ethereum, so things can move back and forth easily. About 6.5 years ago, I helped a professor and his PhD team commercialize that. We raised money from Andreessen Horowitz and a bunch of other people. It was like 10 of us in a room in New York in a small WeWork-like environment. And today we are almost 280 people global and one of the largest blockchains. So very deep Cornell Big Red here from me. And your question, Ralph, was what is digitization? What is tokenization, correct?
Yeah.
So when I say everything can be digitized or tokenized, I don't mean digitized the way it is right now, because the world is, in the developed world, everything is pretty much digitized. But they're in specific silo servers and one-off databases. What I mean by tokenization, digitalization, is when the asset itself can actually be turned into a programmable smart asset where you can code in the who can issue, who can exchange, and the rules of compliance right into the asset. And when you can do that, you create a lot of efficiency, and you also make the process a lot cheaper, and enables so much more from that asset that you can even, part of the reason why a lot of people don't have access to alternative assets is the cost of compliance behind that asset. So when a Blackstone or a KKR, when they do a fund, $100 million ticket from a sovereign wealth fund or a pension fund or endowment, it costs as much to service that as it would for an individual to buy that same product. So tokenization of it and programming the logic into the asset itself reduces the cost so that they can actually provide more access to everyone.
Thank you. So I think what I'm hearing right now, it's a lot of the things have been digitalized, but there's this new aspect of things being programmable, and that's when we go into tokenization. So it's this innovation part of things. And ultimately, this is sort of disruption. And disruption is not new. We went from cash to Zelle to Venmo. So I'm wondering, where do you see the next big major disruption happening, whether it's Sicilian payments or John in tokenization, maybe Mark on the investment side of things? Can you, Cecilia, I don't know if you want to start us off with that.
I guess the question is like how the new payment will
where do you see innovation really taking place within, for instance, from the business perspective?
Yeah, sure. I think first of all, I feel very excited to be back. This is my first time to visited the Cornell Tech campus. In last 6 years, I was in Shanghai. So New York City for me, it's like first time after 80 years. So I feel super excited. I feel like home here. And when I started in Cornell, emerging market feel like a home, but it was actually really emergent. So I'm so excited right now. We have so many people in Emerging Market Institute, and I feel very proud of this institute. So back to the question. So it's actually, I need to start it with what I'm doing right now. So as the CFO of the flight group before, my relationship with payment team is more about collecting the money from the customer and settle with the airline partners and the hotel partners. So the nature of the online travel industry is actually cross-border to start with. People book, so people come to our company website to book flight with 500 different airlines all over the world, with hundreds of thousands of hotel rooms all over the world as well. So I think before I touch on the new trend or what I feel excited for the future, I need to touch on what is the pain point right now. So for the e-commerce company like us, we are very sensitive to margin. Right now, for any payment processor, the traditional payment processor, they charge about like 2 to 3% the payment fee. I'm sure like our friend from Mastercard here should agree with that. So 2 to 3% payment processing fee is a lot for the online e-commerce company. So from the cost side, it's a pain point. And also in terms of the settlement side, because it's so deeply integrated with the traditional SWIFT system, so it cannot guarantee 24/7 or immediate settlement. So that creates a lot of churn in terms of the internal financial operations. So what I feel very excited about this new way of digital assets or new form of payment is actually it can improve the company's margin by reducing the payment cost. On the other hand, it will improve the efficiency, which will give us more cost leverage. Essentially, for a company like us, we would love to have the margin expansion. So those two things will actually make us feel very excited.
Yeah. So now we've talked about a little on what would be the frictions that would be solved by integrating this new digital assets from the business perspective. So predictability is one of the major factors for businesses when doing business. So I really want to go now into the policy side of things. There needs to be some sort of structure companies can look at to really implement, let's say, new forms of payment, or even internally, like the use of stable coins. So I would love to go.
Can you hear me? Let me
Yes.
let me start. Let me start maybe by thanking you, uh, um, first of all for having me here. And unfortunately, I couldn't be at Cornell today, but I am not a Cornell grad, but I am very glad to have been re-invited again to this conversation, and particularly to the emerging markets department with Professor Lourdes to have this discussion. I think on the policy side, there are three things that are happening. Of course, let me speak maybe from the emerging markets and in particular the Africa perspective. What we are really seeing is, this is a huge need for additional resources to be able to grow the continent. We need about $4.3 trillion for the SDGs. Africa alone needs about $402 billion to meet and close the infrastructure gap. We know that remittances today are, twice as much as all development aid combined. But as has been said before, the difficulty that we continue to face, and I think the G20s, I wrote an article saying that for the last 12 G20s, we've been talking about reducing the cost of, remittance transfers, but not able to do it. And now we have the big, beautiful bill, which has added a tax on remittance transfers. So we're essentially robbing from those that do not have even more because the systems just don't work well. Payment systems have not been able to work. And I think for us, on the continent, this is a leapfrog opportunity. But we do need the regulation, we do need, first of all, to get the licenses to be able to begin to do this in a way that is transparent. I think the biggest fear, of course, is the scare of not being able to. And in the last 2 weeks, we just saw that South Africa and Nigeria got taken off the AML, the anti-money laundering, and the FATF, the Financial Transactions Supervisory Authorities Board. So there is that tension, right, in the developing world, that even though we now have this technology that is so good and can cut off the middlemen, and we all know as economists that the middleman, creates additional fees and additional revenue. The risk is that if you do it without the right policy prescriptions, the right environment, then you get very quickly into trouble. Particularly, I'm talking here about stable coins, maybe in particular. If you start doing that without the right regulatory framework, then your whole financial system could get cut off. And so we do need to put in place the right systems, the right processes to be able to do that. And I think this is part of the fundamental issue. The second one, of course, but then we can come back to this later, is the whole concept of de-dollarization. And what does that mean if we were able to begin to use digital assets? How do we define the digital assets? I'm asking and sort of saying, if we were to do a sort of stable coin type asset on the continent, we should do something that's linked to the SDRs, because then it's a basket and we're not then wedded to a particular currency. But this is work that we have to do, and hopefully that maybe with a few others on the call we can do it and continue to work on it with the university. Thank you.
Thank you. So I think we talked a little from the policy side, but we've gotten the Genius Act recently. So I was wondering, John, what are your thoughts on the Genius Act? Could you tell us a little from your perspective, what railroads have that placed in, what's lacking as well?
So the Genius Act was passed this summer in the U.S. and it's a stable coin on a federal level in the U.S. now. It is legal. However, the specifics from a bottom-up perspective still need to be defined. Such things as reserve. What are the reserve instruments that are allowed? How much reserves? All that stuff. So the details have to be figured out. But a theme that's been in emerging markets and in today's panel so far is regulatory clarity. Stable coins and having a bill that's basically on a federal level, basically allowing it to be legal, has already lifted off a whole bunch of use cases, especially, ironically, outside the US in the emerging markets and LATAM, for instance. As a practitioner, we at Ava Labs Avalanche, we work a lot with people in Argentina. I've met Milei many times. A huge adoption in Latin America, as well as Africa and Nigeria. And what we've seen, and there's a company out there called Artemis, that's a data analytics company, and they printed out nice research. So if anyone wants to go check it out, you can see it, the data for yourself. Basically, since the Stable Coin Act Genius was passed, into it and out of it, the use of stable coins as payment rails, not for speculation of on-chain trading, has increased 70% year over year. Now, the numbers are still relatively small. It's on an annualized run rate of about $400 billion a year. That sounds big, but in the world of trade, it's not that big. The interesting fact about this is very little of that payment flow from stablecoins since the bill passed in the US is US to US. Very little. Most of that is through corridors of trade in a business to business manner, and where the international correspondent banks are not, don't have great connections. And that's where suddenly the regulatory policy clout in giving companies some, call it conviction to use this technology, that they won't be in trouble with some regulator somewhere, has literally lifted off with like 70% plus year over year growth of using it as a technology wrapper to decrease costs for moving value from one place to another. We're talking Brazil to Asia, Brazil to US. That's how it's been being used. It's not US to US yet. And there's a whole different segment of retail people on the remittance side also lifting off, although individual retail numbers can never be as big as business to business.
So we've talked some on policy on the Genius Act regulation, and a lot of it is collaboration of different stakeholders. So you have the business side, the developer side, and then government plays a huge role in this. So Mark, I know you have a new book coming up along with Professor Lourdes on January 2026 on CBDCs. So I really wanted to ask you if you could give us some insights from your book, maybe some key data you found, and what inspired you to really write this book?
Well, one of the important points of the book was, and something to our great surprise when we started the research, was that every central bank in the world, almost without exception, is exploring digital currency. It's quite amazing when you think about it. You can look at Africa, the Middle East, you look at South America, Asia, and of course, you name it, people around the world are looking at digital currencies for central banks. But another thing we pointed out in the book was that there's so many other alternatives. You just discussed stable coins. Besides that, there's so many other instruments that people are using to move money from one place to another. But I think the most critical issue, I think, John, you touched on this, was that the drive is to reduce the cost of transferring value from one person or one company to another. And that's very much related to the democratization of money, because so many people around the world find it very expensive to move money. Of course, if you're a big corporation, if you're a big government, there's no problem. But if you're a small investor or small entrepreneur or small consumer, it's really a problem. And it's interesting to note that in some countries, the penetration of digital payments has been quite remarkable. Probably the best example today is in China. If you go to China, you'll see that everybody is paying with their cell phone, doing a digital payment. In fact, even street hawkers use this system. So the drive is very much towards the democratization of currency. Now, whether central bank digital currencies are going to do that is a big question mark, because many people are against central bank digital currencies because it means that central banks can control how they use their money, when they use their money, etc. But it's definitely gaining ground at a rapid pace, but it's competing with all the other instruments that you're seeing around the world. And there's a whole new generation of people who are really desiring very strongly to get away from central control of currencies. And of course, the whole phenomenon of blockchain, the development of blockchain, and the development of various currencies, Bitcoin, of course, is a prime example, but many others, is a testament to the fact that there's a whole generation of people who want to move away from government control of how they spend their money, when they spend their money, etc. So it's quite a very, very amazing development that we're seeing, and very complicated as well.
Yeah, and I think Mark mentioned something really interesting, which is how there are different problems around the world that digital assets are there to solve. So, John, I was wondering if you could give us a little insight into how do you see different use cases around the world? Because I imagine, for instance, Argentina deals a lot with inflation and volatility on their currency versus the US. So I was just wondering, how do you see different adoption and use cases around the world, around different emerging markets?
Absolutely. Like I said, we work a lot in the country of Argentina because their adoption of crypto was far, the penetration rate of the average population was far greater than that of the US until about 2021. And even to this day, even though the percentages, 30% are adopting or something like that, they're actually using it for utility. A lot of the US adoption is more speculation on the assets itself. So they're actually really using it. And whenever I go to Argentina and talk to people there on the retail or the individual side, it's pretty clear. They use it for a store of value, and they also use it as a medium of exchange. So a lot of the people there, you can't, it's limited or it's banned as to how much you can convert your currency into the peso into dollars. So there have been people there buying Bitcoin for a long time and then now buying stable coins as a means of transaction. And a lot of people there still remember, I think roughly 2001, when effectively the regime basically took back dollars at a rate that was probably unfair. So that still sticks in the back of the mind. It's funny because in these countries, the concept of hiding money in the mattress still exists because of the distrust. And now it's just hiding it in a little ledger. And in terms of payments, literally you can buy a house using stables. It still goes through the legal system, Argentina, but you don't have to use peso to actually buy or transact in a house or other, or even large, very large purchases. So that's fantastic. Now, there's a third component that people don't use as much, but it's becoming widely adopted. It's called the Decentralized Finance Network. And this is basically a P2P banking system. In the US, the rules have, the Market Clarity Act that's trying to go through, Congress still has to work on it, but this is basically a decentralized P2P banking system, loaning, borrowing, exchanging of everything. And more, I'm seeing in emerging markets, people are using that and keeping their money out of the country's banking system and doing it in this P2P decentralized finance way. So that's the third way they're actually using crypto to be banking, not just as a store of value and not just as a medium of exchange.
Yeah. So we've talked, I think, quite a bit on stable coins, but John, you mentioned store of value, and I think I would love to turn more into Bitcoin. And I guess a lot of people today in this room have questions on what is Bitcoin. We've seen the price gone up, so maybe we could talk a little about how you see Bitcoin. Maybe Mark, also your perspective on Bitcoin as an investor.
Just let Mark go first.
Okay, Mark.
I must admit that I'm pretty ignorant. It's interesting. John Ninia, who participated in this book that we're coming out with in January, when I first met him, I said, John, where do you invest? This was, it was about 4 years ago. And he said, I'm investing in Bitcoin. I said, John, you better get rid of that right away. It's very dangerous. And of course, you know what happened since that time. So I keep my mouth shut when I talk about Bitcoin. But I think the important thing, as I pointed out, is that young people like John and young people around the world realize that governments have the power to print, and devalue the currencies, which means they're inflating the economy. And these young people are beginning to think, wait a minute, why do we have to have faith in the country's currency when we can go into Bitcoin, which has much more long-term stability, in other words, the value. There's a limited amount that can be produced, et cetera, et cetera. So I find that it's quite remarkable what's happened with not only Bitcoin, but the currency, John, that you worked on, and other currencies around the world. Quite remarkable. It's quite something, and it spells that people around the world have more faith in these digital currencies than in the currencies of the country they are now living in. And Argentina probably is the best example of that.
Mm-hmm.
So I agree with what Mark said. It all ultimately comes down to trust. And there are other cryptocurrencies in the 2000s before Bitcoin took off in roughly 2009 after the great financial crisis. And that was because of a lack of trust even in the US system for a period of time. And today, I think the price of Bitcoin, the volatility is coming down, but the product market fit for Bitcoin is really still store of value, even though half the people in the flows of buying or selling Bitcoin is speculating, the other half is actually holding it as a store of value. So that's why the volatility is still high. But over time, any emerging asset, once it becomes more mature and the purpose of the asset, in this case, Bitcoin, is held by people who think of it as a store of value, it will be less volatile. But this is why also stablecoins was invented, because you can't have a payment rail or medium of exchange if things are that volatile. So therefore, the crypto developers and entrepreneurs decide to create the concept of a stablecoin.
Yeah. And I think, Mark, you mentioned something really important right now in macroeconomic aspect, and it's the printing of money. So, and inflation in the US particularly. So debt levels in the US are very high as of now. And in class, John, you mentioned one of the, if not the only solution towards the debt US crisis right now is growth, and growth through technology, through AI, through robotics. So I was wondering, maybe Cecilia, you could give us a little insight on how do you see AI usage for growth of businesses in the US globally? What's your perspective on AI right now?
Yeah. That's very interesting. So I just like take the travel sector, which I am right now, and then I just share what AI is doing in the travel sector. There are twofold. So the first one is on the inspiration side. So people like traditional people, in traditional way of booking travel, people come to the website and search the flight which you want to take and the hotel room you want to take as well, or things you want to do. So now with more and more like the agent type of thing will act on behalf of you. So you just need to tell the agent that here is the place, here is me, what I'm looking for, and then they will actually come up with a personalized itinerary, which probably are exactly what you're looking for, instead of you going through thousands of routes or like hundreds of hotels and try to choose it. So by doing this, it can solve your personal need plus your inspirational need very quickly. So by doing that, that's actually will improve the conversion from the company's perspective. So in that way, people become like a sticker to our product. And on the other hand, inside of the company operations, so we have a lot of meeting agent in different sectors. For example, in the finance department, we have agent to work with us to come up with investor relation stories. So traditionally, you need to like have 10 people in the investor relation department try to come up with the narratives to deal with the investors after every single earnings call. Right now, we only have 2 people because the other things can handle the 2 agent. So this actually is applicable to every single sector of the company, every department of the company. So in that way, we can actually see a lot of cost efficiency in terms of the improvement as well. So that's why, like you can see, on the one hand, the technology company really booming in terms of the stock price, and on the other hand, they are cutting their labors. So unfortunately, that's twofold. Yeah.
Mm-hmm. So I think it's interesting. We've touched on, the benefits of growth and efficiency, but also on the risks that AI might present. So, Vera, I would love to ask you, how are you looking at AI? I know you have experience on the World Bank, so what's your perspective on AI?
And that's a broad question, so maybe I will bring it together. But I wanted to come back also to the question on why are we using the stable coins. And I think maybe Africa is not exactly like Argentina, but a few countries post-COVID got 40% inflation. But we're struggling, I think, generally emerging markets from 2 things, and maybe this is related to the AI question as well. But first, if we start just, there is right now a huge inflationary pressure, and we're seeing it rising again. And so my guess is that as we see inflation, maybe at least the Fed has said that they are not going to reduce rates in their next meeting. This is public information, means that there is some pressure. I think we're going to begin to see a lot more people going off the sort of currency rail into a stablecoin rail, because people are going to begin to manage trying to find more stability and manage the volatility in currencies that we see. And this is I think one of the most important reasons why we need to do this. I think on the AI in general, why is it important? There's 3 reasons why it's important. One, it's notwithstanding what has happened in the markets in the last week, which I think is just a question of, people are not seeing where the sort of profits are going to come from the immediate investment. And then there is news, of course, from Asia about ways of getting to the same result in a slightly less expensive way. But if we look at what is happening in China, for example, and sort of the AI advances that are happening, you begin to see how in a continent where 1 in 4 people by 2050 is going to come from Africa, all of a sudden we need to create jobs. What are the jobs that are going to be created? How are those jobs going to begin to respond? And I think AI is beginning to give us a sense of the new kind of jobs that we need to begin to get our education systems to work towards so that we can take advantage. I am a believer, yes, AI is going to destroy jobs, but it will probably create more jobs than it is going to destroy, depending on how we organize ourselves. And there is a huge opportunity from that perspective in terms of what we need to do and how we should be doing it. It is, and that's where we got the Nobel Prize from Philippe Aghion and the rest. It's the innovation, it's the creativity. And I think that is something that we can do much faster. I give you an example. In Kenya, for example, today, we have something called the iCloud factory. And what does the iCloud factory do? From things as simple as watching soccer games and calculating how fast the player runs, so that you know that if you want to be a linebacker, you need somebody who runs faster than the other guy. All of these speeds, as you watch, we're in soccer season in the United States. When you watch NFL games in Kenya, there is a young student in the iCloud factory calculating the curve of the ball, the throwing of the ball. This is all using AI, and that information is being remitted, live at the instant back into the field in Philadelphia or the field in New Jersey. The same thing with driverless cars. There is a kid in Kenya who is calculating the speed of the car and making sure that the cars are not going off ramp. They're even working on NASA projects. So for me, I think AI is going to open up a different kind of job market, but we do need to prepare for it. There's the other side, of course, of the AI revolution, which is how we manage private information and how we make sure that data is secure, and most of all, and very importantly, and something that I've been working on recently a lot, it's just the information, what becomes true, and everybody gets a lot of information at the same time. Very difficult to discern what is correct and what is not. And if we're going to be in an age where we need to inform people and give people better education, then we need to make sure that at least that education is filtered and clean enough, or at least robust enough that you can use it. So I think there are positives. There's a lot of positives. I'm a believer that it's much more positive than it is negative, but the negatives can be quite overwhelming if we don't, again, go back to this legislation and putting in place the right policy framework within which we can take advantage of all the benefits of it.
And then, Mark, has AI shaped in any different way the way you look at investment and the investment process? How has AI helped in that process? Are there any risks you've identified?
I agree completely with Vera. A lot of the young people, in fact, just today I was talking to some people and they were very pessimistic. They said, oh, God, everybody's going to lose their jobs, but nobody will have something to work on. But I agree with Vera. I think this whole situation is going to create many more new jobs, many new opportunities for people around the world. And people in remote areas who previously probably wouldn't have the opportunity to work on some project now have the opportunity to do that through the mass communications and the terrific communication systems we have in place today. In the investment world, AI has really had a big impact because the kind of job, for example, we're running an equity fund, the kind of a job that a normal equity analyst would do in the past has been transformed, because the information that we normally would get from an equity analyst, we can now get in ChatGPT. So the analyst now has to think of a different way of thinking, a different way of working. And I think Vera pointed out a very important point, the importance of creativity. In other words, we're going to need more and more people who can think creatively and think out of the box, so to speak. And in that way, we're going to have a different kind of analyst. We won't be reducing the number of analysts, but we'll be increasing analysts who are creative and who can think in a different way. And the horsework, so to speak, the kind of calculating work that we normally would do can now be done with the blockchain, in the blockchain. and organizations that have AI facilities.
Thank you, Mark. Just to close us off, so John, you're an entrepreneur, which I personally really admire. And I think we have a lot of people who are excited about the future. And I think especially the 4 to 5 next years to come are a huge window of opportunity within the digital asset space for growth, new business models. So I was wondering, do you have any message or takeaway you would like people who have the idea of being an entrepreneur to use this time of opportunity? What would be your message to them?
Absolutely. So, I spoke in class to young, smart people like yourself, and there's a lot of students here. I think the days where you go into one industry and then you stay in that industry for 25, 30 years and become like some of the previous people, managing directors or heads of Goldman Sachs, partner, or whatever, those are going to be harder to come by. The technology and the economic cycles are so quick now. You're going to have to be flexible and constantly reinvent yourself. And in terms of areas that are interesting, at least to me, right now I'm just excited because 4 or 5 years ago I was dreaming about stable coins, and now it's just taking off. But 4 or 5 years from now, I'm super excited about the intersection of a lot of these technologies, such as blockchain and AI. I think blockchain and crypto can solve some of the issues with AI, provenance of the data, the identity of real or the veracity of the data, whether it's real IP or copied IP, et cetera, et cetera. Obviously, stablecoins taking off, but like agents paying other agents for you without you even having to be there, that's going to be huge. That's another intersection. In fact, all of this first has to start with the third thing I think blockchain can do, which is a proof of humanity. So even Sam Altman has now his WorldCoin, which is they scan your iris to make sure that the physical thing, the immutability and the permanent part of the blockchain is great, but you can put something permanently that's false. So that's why he's working on the WorldCoin scanning of irises and making sure that it is human associated with whatever transactions or data that is being put on a blockchain to be permanent. So that's super exciting, the intersection of different technologies like AI and blockchain.
Okay, thank you. And I think our time is up.
Thank you so much to our panelists for being so generous with your time. Next, I'd like to welcome Dean Vishal Gaur, who will be moderating the next segment on global